All right, I say hello and cheers to all my good trading friends, my friends in general. Those who are just passing by, seeing this for the first time, welcome to Happy Hour with the Lincoln, where week by week I'll do my best to answer all of your stock market related questions. Or maybe I'll rant. Or maybe I'll curmudgeon, because you know I loves to curmudgeon. You never know what you're going to get. That's why you should tune in every week to Happy Hour. Now, if you are sitting there and you're saying, look, Doug, your topics, they blow. You blow. I'm just watching because you're entertaining. Look, do me a favor. If that's the case, and you think you've got this topic that the trading community wants, send it over. Support at thelincolnlist.com. I'll do my best to put it on some of these upcoming episodes. And also, don't forget, before I get started with today's talk, that my new DVD, Rock Solid, is available and it is free. I'm getting a lot of great response from it. Thank you guys for watching it. I appreciate it. My gift to the trading community. The link will be up here somewhere. Give it a click and give it a watch. So here's what I'm going to talk about. I'm going to talk about the do's and the don'ts of trading. As most of you know, I've been doing this now for 20 years. And one thing I cannot do is recommend what is the best strategy for a trader. I can't do that because what I do, even though I have a 75 to 80% win rate, doesn't mean you might have a 10 doing what I do. Maybe you have a 90. You could even be better. Who knows? But strategies are so specific. And one thing I can guarantee you, I can swear and guarantee you, I hope I'm not offensive by being swearing, but I say this, you will never, ever, ever be able to copy someone's strategy perfectly and do what they do. No, you can kind of follow their idea based on what it is, their core strategy, but you're going to have to take it and hybrid and make it fit within your personalities and how you do it. I know you hear differently on social media, but you can't copycat no one and get rich. You know it. I know it. Sometimes we don't want to think that way because it's not easy, but it's the truth. And that's just how it is. So here's what I do know. When it comes to strategies, to me, it doesn't really matter that much. There's a core foundation that every trader has to have to be successful, period. And this is what I want to share with you because I've learned this over the 2 decades I've been doing trading. And that is there are things that you must do and things that you must not do. You shouldn't be doing these. I can tell you what you should and you shouldn't be doing. Now I'm going to go through this list, give you 5 of them, but I think is some of the most important. No specific order because I'm too lazy to put them in an order. But here's what's important. One of the important things is that you have that process I just talked about, that niche that you find in the market. We know there's a lot of stuff out there right now to trade. Cryptocurrencies, bonds, options, stocks, foreign currencies. I mean, when it comes to options, you can do whatever you want to, right? I mean, it's just binary options, you have leap spreads, all that kind of good stuff. I mean, it's like this entirely humongous world. The market itself, there are thousands of stocks. Millions upon millions of players, different things going in and out, penny stocks, big boards, all that good stuff. You don't have enough brain power and time to execute everything. You can't be the world's greatest commodity trader, the world's greatest Forex trader, and the world's greatest option trader all at once. You've got to pick your specific niche and strategy, and like I've said in so many past ones, and exploit that. Find your edge, exploit it. It doesn't matter what it is. It doesn't matter if someone else disagrees with you, which is hilarious. You see that on social media. Somebody says, your strategy, I disagree with your thoughts. I disagree. They don't pay my freaking bills. If it works for you, you use it. That's what you should be doing. You should find what your niche is, shut everything else, and then go for it. What you shouldn't be doing is bouncing around or having that trader's junk drawer that I called before, which is a bunch of different strategies, a bunch of different systems, bouncing around from one chat room to the next chat room. You know, that's going to get you nowhere. It's going to cause you to lose a lot of money. And in the end, you're going to know a bunch of stuff, but you're not going to have any power over the market. You're just going to be a victim and you're going to lose money. So that's what you should and shouldn't be doing there. The next thing that you should be doing is that you really shouldn't call yourself a trader. Yes, we trade, but what we really are is we're risk managers. We should be focused on risk every single trade. And we should never risk more than we can handle on a single trade. Now, I know that's real easy fundamental talk. You heard it before. I'm not the first one that brought that up to you. But here's the thing. It's so easy in the heat of the moment to lose that. So what you shouldn't be doing is making excuses for that risk, right? When you set a specific risk parameter in your mind, there's a reason. It's either a financial risk or it's a chart risk. Somewhere you said, I will lose X amount of money. Maybe some of you trade and you're like, I'm just thinking about the reward. What you really need to be doing is thinking about what is my max risk in every trade I take. Because the point is to subject yourself to opportunities to where you have great risk with the most upside potential of reward. You don't want to have like a little bit tiny reward with a max potential of risk. That's going to cause you a lot of headaches over a long period of time. So what you should be doing is focusing on risk. What you should also be doing is not making excuses for that risk. That's very important. You're not really a trader. You are a risk manager. The other thing that you should be doing is you should only be worrying about what it is that you can control. Now, this is something interesting you're going to see right now, because as I'm doing this happy hour, it is earnings season. And when you get to earnings season, especially if it's Tesla, you get some emotions being thrown around, right? And this is the thing. When these companies come out and they report earnings, there's going to be a handful of people that says that is a terrible earnings report. It reads awful. Stock will tank. There's another handful that will say that's pretty good. That's a great earnings report. They're reading the same thing and translating it different. Kind of like the Bible, right? And then they go their different ways with it and they stick to this, right? So you can only worry about the things in front of you control. What you can't control is how's the street itself? How are the big money players? How is the big money going to react like this? And we've seen that. This earnings season, we saw stuff like Caterpillar just a few days ago tank on earnings, on bad earnings. The stock goes down $15. Everybody's running away from it like it has the plague. 2 to 3 days later, the thing has retraced all of it. So it's like, did you forgot? It's like you read one thing and now you're doing the other. You also can't control things like what people think about you, whether the market goes up, how the market's going to react to economical numbers. Shorten the market now and saying, hey, unemployment's going to go higher. Trade deal's going to put a crimp on the economy, but the market keeps going up. Why? You always hear people going, this is the most hated rally forever. Look, guys, that is something that you cannot control. And if you try to control something in that, because you don't have enough money to do that, I don't know, all of us together we don't run the market. And if you try to, you're going to let your emotions get in the way of opportunity, and you're going to fight trades and disobey number one and number two that I talked about, which was risk. You're going to disobey that because of your beliefs. Which brings me to the next one, which is leave your beliefs out, your moral beliefs, your political beliefs, your religious beliefs. Leave that out of trading. Because what we always say, these last two that I talked about, when somebody says trading is emotional, or keep your emotions out of trading, we often refer to emotions as being just like, I lost, I'm mad, right? Emotion is also the attachment, the heart attachment to something. Again, you see this with Tesla. Just go down and read Tesla after earnings. I actually did a YouTube video on it, how hilarious people are and the words that come out of their mouth. And the reason that you have to do that is you have to understand, this is a business. You're trying to make money. You do not control the world. You do not control the market. You got to pay some bills. That's what your job is. Make some money, pay your damn bills, right? Be a professional. You can't let these emotional things get in your way. You can't let personal beliefs about a company, things about maybe moral beliefs about shorting or stuff like that, or whether you like a company and you don't want to short it, even though the writing's on the wall. It's just business. It's just business. And you've got to leave those out, because if you don't, you will become extremely emotional, and that will cause you to disobey rules like risk, hanging on to losing positions, and blowing up accounts, and just overall being a miserable nightmare emotional wreck. You don't need that. And the last thing I want to talk about is change. Good old change. Now, I don't mean change your strategy, because I did say in the beginning, financial junk drawers and all that good stuff. I don't mean that. But you will have to change the way you approach the market and how you execute your strategy. For example, 2017 was a non-volatile market. It was quiet and docile. You never really got a 1% pullback at all in the stock market for the whole damn year practically. So there were different ways you approached that. 2018 brought back volatility, so you had to change with that. Now you're going with this V-shaped rally here, you know, from the biggest sell-off in 30 years to the biggest rally in 20 years, back to back. You got to change with that stuff. Like I said before, when I first started trading, it was done in fractions. So you're going to have to change. You don't have to change what your core strategy is, but you will have to change the way you approach it, the way you think about things. Things will come into the future that you will have to add and subtract for your business. Like I said, when I started out, not only was it fractions, we didn't have Twitter, we didn't have Facebook, we didn't have the impact of social media. News wasn't readily available to us like that. So the market's changed. The dynamics of the market have changed, and you will have to change with it. And that's all there is to it. If you don't change and you don't evolve, and you know, whether you like it or not, again, this is kind of how I am. You know, I don't like social media. I think it freaking sucks. I really don't want, I'd rather just be in a shell and just say nothing, right? I know you guys find that hard to believe. He wants to be in a shell? Really? He wants to be quiet? Who knew? But I've had to get used to it. You know, I've had to get used to being on the internet like that. And it's different. But you have to be able to change. So anyway, I hope these things help you guys make some money as always. Look, you know where I'm at. If you need some help, reach out to me at support@thelincolnlist.com. Thanks for watching this video. I want you to trade well next week, and cheers.